As COVID-19 builds momentum, South Africa is facing an employment crisis. Millions of our people are set to lose their jobs. The South African economy was already in dire straits prior to COVID-19, and this pandemic has merely magnified a problem that has already been there. In fact, Nedbank has recently forecast that 1.6 million jobs will be shed in the country in 2020, and the National Treasury is expected about 7 million job losses, considering that only 900,000 jobs were lost after the global financial recession in 2008. This pandemic is going to make a huge impact in South Africa. Considering that, I'm going to give you the ultimate retrenchment survival guide for South Africans.
Welcome to the Wealth Nation podcast, a podcast for every mother, daughter, grandmother, sister, and wife, and the men who are smart enough to tune in. The Wealth Nation podcast brings you all you need to know about investments, business, property investments, personal finance, and all-around financial wellness. Here is your host, Yolanda Rose.
Thanks for joining me today. I am Yolanda Rose. I'm a wealth coach and I'm a financial advisor. And this is the Wealth Nation podcast. It is my goal to bring you all of the tips and tools and techniques and strategies that you need to manage your money well and to build generational wealth. Please consider subscribing to the show, and also please leave me a review on whichever platform you're listening on, particularly reviews on Apple Podcasts and on Facebook as well. Our Facebook page is Financially Fabulous Females. We're also on LinkedIn, TikTok, Instagram, Facebook. So reach out to us if you need any information or have any suggestions for me. Please, you can mail me at yolanda@financiallyfabulousfemales.com. The Wealth Nation podcast is sponsored by Audible. Audible is a seller and producer of spoken audio entertainment, information, and educational programming on the internet. Audible sells digital audiobooks, radio and TV programs, and audio versions of magazines and newspapers. For a 30-day free trial of Audible, go to www.financiallyfabulousfemales.com/audible. With retrenchments happening in almost every industry in the country, it is scary. We are living on edge. We're living on eggshells. We possibly might not know where our next paycheck is coming from, and most companies are retrenching. So today on the show, I'm going to give you a survival guide on how you can plan for retrenchment and how you can come out of the situation unscathed. All it takes is a little planning and being proactive with your planning as well. So my guide gives you a three-pronged approach to surviving retrenchment. Firstly, there's the pre-retrenchment stage. We have during the retrenchment stage, and after the retrenchment stage, I'm going to give you various strategies that you can deploy in your life to handle retrenchment throughout these various stages. So essentially, we're trying to put some fail-safes in place. So if something happens, that you and your family is taken care of during this dire time in our economy. So let's start with the pre-retrenchment stage. Now, at this stage, it's all about preparation, and preparation is key. And the thing that you need to have in place is emergency funds. Now, I spoke in detail about emergency funds in episode 30 of the Wealth Nation podcast. So go and listen to that episode, and I give you guidance on how you can be setting up an emergency fund and when to use it. But before the retrenchment process actually happens, you need to start setting it up. You need to have an emergency fund set up. Second thing, you got to ensure that you're making contributions to your UIF. So check your salary statement. Make sure that UIF contributions are being made. And if not, you're going to have to check with the HR of your company. Because if retrenchment does happen, you're going to have to be making a claim from UIF. And you can only claim from UIF if you have been making contributions. The third thing is you're also going to go through your credit. You're going to your short-term credit specifically and know where you have credit life protection. So you'll be planning ahead here. We're planning to see if we're going to be retrenched, where we can plug the holes, where we can preserve cash, and how to generate cash flow after we have been retrenched from work. And the fourth thing that you need to do in the preparation stage is take retrenchment cover. Now, the scary thing is top insurers in South Africa have pulled this feature away from South Africans, and it's sad because this is when we need it the most. So retrenchment cover basically tells us that our salary will be covered for a period of 6 months or 12 months. However, it's not our entire salary, it's 75%. It's just South Africa and how it works. No company is going to give you 100% of your salaries, or they're all going to contribute 75%. And the other 25% has to come from the UIF. Now, since big insurers have taken this feature away, I do work with a company, a Bidvest-backed company that is providing retrenchment cover. We don't know when this is going to change, so my advice to you is please take this cover now while you have an opportunity. Now, the thing about this cover is there is a 6-month waiting period. So once you join, you got to wait 6 months before you can make a claim. And there can't be any announcements in your company about retrenchment when you take the cover. Remember, this is proactive planning. We know what the environment is like, so we can't take the cover when announcement has been made. It has to be taken before the announcement has been made. The company is restricting the cover. It's not for everybody. It's not for self-employed people. It's not for people in the fishing industry. It's not people in the airline industry, because we know what's happening in those industries already. With Kulula and SAA, people are downsizing, going into business rescue, and that industry is in a bloodbath as well. So those industries are off limits. So if you are in any industry that's not included in the list that I have mentioned, please reach out to me. I can provide you cover. I'm doing it over the phone for tons of my clients, and I can help you as well, especially since it's lockdown. We cannot go out. And depending on the time that you're listening to this, maybe the restrictions are lifted and I can travel. But I'm consulting with people around the country over the phone just to get this cover in place. There are processes that can be used where you don't have to do medical underwriting right now. Just because of the lockdown, nurses are not traveling, so you don't have to do medical underwriting right now. You have to do a declaration of health, of course, but you can get cover on the phone, and I want you to drop me an email. It's yolanda@financiallyfabulousfemales.com. So that's the preparation stage of this survival guide. You need to have everything that I mentioned in place. An emergency fund, retrenchment cover, confirm your UIF contributions, and know where you have credit life protection in case you have to activate those policies at a later stage. Raising financially savvy children involves teaching them a variety of aspects, from budgeting to planning to earning and saving. Besides giving them an understanding of the value of a rand, teaching children about their fiscal responsibility helps prepare them for the real world. Financial literacy is a vital skill, and it is never too early to teach kids about money. Many parents wonder how they can teach their kids about money and where to find age-appropriate resources. You can now download my free financial literacy lessons for kids, particularly primary school kids, at www.financiallyfabulousfemales.com/finance for kids. This ebook provides you with sample lessons, activities, lesson plans, discussion points, and quizzes that you can use to test your kids' knowledge on the financial literacy program that I've put in place for your kids.
Like what you hear so far? Make sure you never miss a show by subscribing on Apple Podcasts, Spotify, or Tuned In. Now back to the show.
So the next thing is during the retrenchment. Let's say you didn't survive the cut when it came to your company and you have been retrenched. Now, there are certain things that you have to do and consider during the retrenchment stage, to make sure that everything happens in your favor and that you're making wise financial decisions during this time. Now, the key thing is not to panic. Don't go into devastations. It's not just you. It's everybody that's really struggling at this point. You got to remain calm. You got to take care of yourself mentally. You can't break down at this stage. So the first thing that you got to consider during the retrenchment process is your severance package. Now, this is basically the funds that your employer will pay you as a result of your loss of employment. Now, in South Africa, our law states that we are entitled to at least 1 week's pay for each year of completed service. Now, check your employment contract. It could be more than that, but that's the bare minimum according to South African law. Apart from your severance benefit, you'll also receive monies that are owed to you regarding your overtime that's due, your leave, various commissions that are payable, incentives and bonus. All of those funds need to be paid to you. And also know that the notice period has to be paid as well. So instead of working the employee's notice period, if an employee is employed for less than 6 months, he or she must be paid 1 week's notice pay. If the employee is employed for more than 6 months but less than 1 year, the employee must be paid 2 weeks notice pay. And if the employee was employed for more than a year, that employee is entitled to 4 weeks notice pay. The thing that you also have to consider at this point is the tax on the severance pay that is due to you. SARS will consider the value of your retrenchment benefits with the first 500,000 being tax-free. So if you have been retrenched before and you have withdrawn, that amount is subtracted from your 500,000 rand. So you are entitled to less of a tax concession at this point. So after that first 500,000 being paid out tax-free, the next 200,000 is taxed at 80%. The next 350,000 is taxed at 36,000 plus 27% of the taxable income above 700. And any amount over 1,050,000 is taxed at 36%. So you have several options regarding your severance benefits, and what you need to do with this money basically depends on your circumstances. Obviously, if you have high amounts of debt, you're going to take as much as your tax-free worth and pay this off. At this point, I just want to confirm that the information on this podcast does not constitute financial advice. Financial advice needs to be provided to you by a financial advisor, a qualified financial advisor, based on your personal circumstances. This podcast is merely for information purposes only, so you know what to expect with the retrenchments in South Africa. So because of the uncertainty that's happening in the environment, any cash payments that you do take from your severance pay, ideally you want to settle, especially your high interest debt, you want to settle that, and you want to keep as much money as you can in the short term in maybe an interest-bearing account, a 32-day account, a 7-day account, where you're gaining interest, and which is very low at this point because we know we're taking 2 interest rate cuts this year. That cash needs to be easily accessible, especially since going forward you're not going to have a regular income in place, depending on your circumstance, of course. The second thing to consider is your life cover benefits that the company has provided. Now, on retrenchment, you will lose group life. And when I sit with prospects and I consult with them, a lot of them don't want to take risk cover. By risk, I mean life cover, disease cover, and disability cover, because they have cover in place with the company. When you are no longer with this company, your cover will cease. So I always recommend to my clients, take your own personal cover, how often you move jobs, no matter what your circumstances are, you'll have your personal life cover. So if you're one of those folks where you will lose your group life benefits and you have to take life cover at a later stage, it's going to be far more expensive for you. Remember, risk increases with age. There are some group cover options that include a continuation portion, which the company that does your group life cover allows you to convert your group cover into a policy in your name, underwriting free. And the underwriting free is really important, especially if you're older and your health is not up to date. You have your diabetes and cholesterol and all of those chronic conditions. So at this point, if you have that option, I would recommend that you take it, especially if it's underwriting free. In general, insurers do provide you with 60 days to exercise your continuation option, but you have to check with the provider at your time of retrenchment if you have this option available to you. And this is the ideal time that you need to be sitting down with an independent advisor, where you sit and you see where your gaps lie. Review the level of life cover, disability cover, and dreaded disease cover that you have, to ensure that you have adequate protection. The next thing to consider during retrenchment stage is medical aid. Now, it's important that you have some kind of medical aid in place. Maybe you won't be able to afford the premium cover, but at least have something in place. Remember that a break in membership for more than 3 months can create waiting periods. So it's important to sit down with a medical broker. Unfortunately, I'm not a medical aid broker to give you advice on this. So when leaving your employment as a result of retrenchment, you will need to make important decisions regarding where your money should be kept, your pension money and your provident money. Lump sum from a retirement fund as a result of retrenchment is regarded as a retrenchment benefit for tax purposes. So when it comes to retirement funds, you need to decide where that money goes, because that money will either have to be paid out, or it can stay with the company, or possibly transfer to the new company when you do find a new job. The thing to know is that once you make a withdrawal from your pension or your provident fund, once money hits your account, you are liable for, depending on the amount, you are liable for tax. So while preserving your retirement benefits should be your first option. So if you don't have anything in place and you're forced to withdraw, you are liable for the tax after the first 500,000. But you do have the option of preserving the capital, and there are many ways that you can do that. One, you can leave those funds in your employer's retirement fund, if the rules allow for it. So you got to check with your HR at this point. If you have the option to keep your funds with your company that has retrenched you, and leave the money there and only withdraw it formally at retirement age. The second option is you can transfer those funds into a preservation funds. Remember, at this point, we don't want money coming from the pension fund to your account. We want it to go from the pension fund directly into a preservation fund, that ensuring that you're not paying any tax on this amount. So you can transfer this money tax-free into a preservation fund that's specifically designed to invest your pension or provident fund savings. So a preservation fund allows you to make one full or partial withdrawal during your lifetime. And this provides great value if you really, really can't get an income at a later stage. The one limitation to a preservation fund is that you cannot make additional contributions to this fund. So the next option is that you can transfer these funds into a retirement annuity. So another option for preservation is to make a tax-free transfer of your pension or provident fund benefits into a current RA, a personal RA on your capacity, or create a new RA specifically for this. Now, an RA will allow you to make additional monthly, quarterly, or even annually or ad hoc contributions to this fund, although it's important to bear in mind that you will not be able to access these funds until you are 55. So you still derive your full tax benefits of retirement contributions on any additional contributions that you make into this fund. And the other option you have is to transfer to the employee's new fund. Now, if you're fortunate enough to have found a job really quickly after you have been retrenched, you can preserve your pension fund money by transferring to your new company. There are tax implications when you do transfer from a pension fund to your new employee's provident fund, but make sure you get advice. So those are the things that you need to be considering during the retrenchment process. So the next thing that you got to consider is immediately after retrenchment, or possibly during, depending on your skill level where you can carry out these tasks. One, you got to, as soon as you're retrenched and you've got your 189 form, you got to start making claims from your retrenchment and your UIF. So if you have retrenchment cover in place, once you have that form, you can start making a claim and ensure that your next month's salary is going to be paid. You also need to notify your creditors. So you got to let them know immediately that you have been retrenched, and where you can negotiate and make payment arrangements on the debt that you owe, do that. Your policies such as retirement annuities can be paused. During this period, most major companies have made exceptions to take away the penalties when they are pausing retirement annuity. And also your short-term insurance as well. Obviously, if you have items on finance, you can't really play around with this much. But if you have paid out large assets that you are insuring on a short-term scale, you can negotiate, move from comprehensive to minimal cover because you're not on the road as much. You have options with short-term insurance. In some cases, your life insurance and risk insurance could have built-in retrenchment cover where 70 to 80% of those premiums can be paid if you are retrenched. So there could be retrenchment premium waivers there where you can pause your premium payments for 6 to 12 months while your cover remains intact. So speak to your insurance broker for this. Also, you're going to check for credit insurance. Remember that we did this in the first stage, in our pre-planning stage. So all of those companies that we've identified where we have credit life insurance, where this benefit could cover your installment up to 12 months, depending on your policy. So it's important to note that you will be able to claim this benefit if you are up to date with your payments. So it's important to speak to your credit providers immediately before you default on a payment. Then is the UIF benefits. As long as you and your employer have been contributing to an unemployment fund while you were working and you have a termination letter from the company, you will be entitled to claim unemployment benefits from the fund in case of retrenchment. Now, this benefit should be claimed within 6 months of retrenchment and can pay out up to 12 months or until your benefits have been exhausted or you find employment. And then again, you got to go back to basics, reevaluate your budget, pause the purchase of luxury items and non-essential items. You'll be surprised how you can manage on a basic budget if you really put your mind to it and you plan smartly for it. And don't be afraid to ask for help. I am a financial advisor and wealth coach. If you need somebody to bounce off ideas, you can drop me a line. It's Yolanda@financiallyfabulousfemales.com or go to our website, www.financiallyfabulousfemales. Click the Work For Us button on the menu and you can book a phone consultation at no cost, and I can assist you wherever I can. All right, so that's my 3-pronged approach: pre, during, and post-retirement. All of the things that you need to get in place to survive this and come out of this process unscathed while you start building your career to the next phase and start looking forward to better times ahead that are definitely coming for South Africans. So that's it for me on this episode of the Wealth Nation podcast. I'll chat to you next week.
Thanks for tuning in. Make sure to visit our website at www.financiallyfabulousfemales.com and sign up for our free investment masterclass.